Welcome back, listeners. We're diving deep today, getting into some really interesting financial
Oh,
results.
this is going to be good.
We've got the whole shebang: press releases, official statements, investor presentations, you name it all, about Aadhar Housing Finance Limited, their second quarter fiscal year 2025.
Aadhar, yeah, they're a big deal in India's affordable housing sector, right?
Absolutely, particularly when it comes to loans for the economically weaker section and low-income group, the EWS and LIG.
Right, right. Focus on those who need it most.
But what's got me hooked on this deep dive is how they're managing this incredible growth while staying true to that core mission.
Yeah, that's the sweet spot, isn't it? Balancing the books and making a real difference. It's not just about profits.
Exactly. Take a look at their assets under management, or AUM. This quarter, it's a whopping 21% jump year on year,
21%, that's huge.
hitting a record high of, get this, 228.17 billion.
Okay, now we're talking serious money. We're talking about financing potentially thousands upon thousands of affordable homes. That kind of growth, it really tells a story about the market in India.
What story is that?
The demand for affordable housing, it's just skyrocketing.
So we see this huge surge in AUM, but what I find even more impressive, really, is that they're doing all this while keeping those yields and spreads stable.
That's a sign of a healthy business. Healthy and well managed.
Now, I know not everyone's a financial whiz, so could you break that down for our listeners? What does stable yields and spreads actually mean in plain English?
Sure, sure. Think of it this way. Stable yields mean Aadhar is earning a consistent return on their loans. And stable spreads, that means they're doing it without taking on too much risk, which is critical for any lender, right?
Absolutely. But even more so in the affordable housing sector.
You got it. Because borrowers in that sector, they might be more sensitive to those ups and downs in the economy. So keeping things stable, it's a sign they're doing their due diligence, being super careful about who they lend to, how they manage those loans, the whole 9 yards.
And they're not just focusing on the big picture. Even their gross NPA ratio, it actually improved a bit,
Oh yeah, by how much?
down 6 basis points, sits at 1.29% now.
For those who don't speak finance jargon, that's 1/100th of a percentage point. So 6 basis points, while it might sound small, it's actually significant, especially in an industry where managing risk is like everything.
So the big question is, what's driving this impressive growth? Are they just lucky, riding the wave of a hot market, or is there something more strategic at play?
There's definitely some strategy there. You don't just stumble into that kind of success. Take their branch network, for instance. They added 9 new branches this quarter alone.
9, wow. That brings their total to
A staggering 545 branches across 21 states and union territories.
that's nationwide.
But here's the thing. It's not just about blanketing the map with branches. It's targeted growth. They're focusing on what they call deep impact branches.
Deep impact.
Yeah. These are branches specifically in Tier 4 and Tier 5 towns, those smaller towns that are often overlooked by traditional banks. It's like they're tapping into this massive untapped market.
And those deep impact branches, where are they concentrated?
Well, Uttar Pradesh now has 68 branches, Gujarat's got 67, and Maharashtra's at 65. They're going deep into the heartland of India, where that demand for affordable housing is strongest.
It's almost like they're not just chasing profits, they're actually addressing a real need in the market, filling a critical gap.
Exactly. And they're not stopping at brick and mortar either. They're investing heavily in tech and data analytics. It was all over the investor presentation.
What kind of tech are we talking about?
Think digital onboarding for new customers, loan origination systems that just streamline everything, makes it easier for people to apply, even collection management tools to keep those NPAs low.
So it's all about being more efficient, reaching the right customers.
Right, and assessing risk more effectively, managing those loans in a way that's good for Aadhar and good for the borrower.
So we see smart expansion, a laser focus on a specific market, and leveraging technology. Sounds like a winning formula. But surely there have to be challenges too, right?
Oh, absolutely. No business is immune to challenges.
Yeah.
And for Aadhar, one of the biggest things they're going to have to deal with is competition.
Makes sense. That affordable housing finance sector is getting pretty crowded, isn't it?
It's a hot market. Everyone wants a piece of the pie.
Mm.
And that can put pressure on profits.
What else should we be keeping an eye on?
Funding. Aadhar relies heavily on external funding sources, primarily banks and the National Housing Bank, or NHB. And that reliance on borrowing can be tricky.
How so?
Well, especially if interest rates start to rise.
Ah, I see. Higher borrowing costs for Aadhar could mean they have to raise their lending rates.
Exactly. And that could make their loans less affordable, especially for those EWS and LIG customers they're trying to help.
It's a delicate balancing act, that's for sure. Strong demand for affordable housing, but rising interest rates could throw a wrench in the works. It'll be interesting to see how they navigate that.
Definitely something to monitor in the coming quarters. But you know what really intrigues me about Aadhar? It's not just about the numbers, it's about that social impact they're weaving into their business model, going beyond just making money and actually trying to make a positive difference in people's lives.
Yeah, that's what's really got me excited about this deep dive. Their commitment to social impact is impressive, and we'll dig into that right after the break. It's incredible how they're weaving social impact right into their business model. It's not just an afterthought, it's a core part of their strategy. Let's unpack this a bit further. I was going through the investor presentation, and they highlight initiatives like Aadhar Karsal, Aadhar Angan, and Ayushman Aadhar. What exactly are these all about?
These initiatives speak volumes about Aadhar's commitment to creating positive change in the communities where they operate. Take Aadhar Kaushal, for example. This program focuses on skill development for underprivileged youth, empowering them with the tools and training they need to secure better jobs and improve their overall economic prospects.
So they're not just providing housing loans, they're also helping people build a more sustainable financial future for themselves. That's really impressive.
Exactly, it's a holistic approach. And then there's Aadhar Angan, which focuses on early childhood education and care. Imagine the long-term impact of providing quality early education to children in these underserved communities. It's investment in their future and in the future of these communities.
It's really refreshing to see a company thinking beyond just the immediate need for housing and focusing on building stronger, more resilient communities. And what about Ayushman Aadhar? What does that initiative entail?
Ayushman Aadhar tackles a fundamental need: healthcare. They support the development of healthcare infrastructure and organize health camps, ensuring that even those in the most remote areas have access to basic healthcare services. It's a recognition that health and well-being are crucial for individuals to thrive and for communities to prosper.
It seems like these initiatives are more than just corporate social responsibility. They're strategically aligned with Aadhar's business goals.
You're spot on. Think back to our earlier discussion about potential risks and challenges. By investing in skill development, Aadhar is essentially helping its borrowers become more financially stable, increasing their capacity to repay loans. And by promoting healthcare, they contribute to a healthier and more productive workforce, ultimately benefiting the entire community, including Aadhar itself.
Okay, now that's what I call a win-win situation. It's a great example of how social impact can be interwoven with business success. But who's at the helm of this operation? Who's guiding Aadhar to navigate these complex challenges and stay true to their mission?
Now, this is where it gets really interesting. Aadhar is promoted by Blackstone, a global investment powerhouse. We're talking about a firm with a portfolio worth trillions of dollars. That's a lot of zeros.
Wow, that's some serious financial clout. What does Blackstone's involvement signal about Aadhar?
Blackstone is known for its strategic investments and long-term vision. They're not in it for quick clips or short-term gains. Their presence suggests a belief in Aadhar's sustainable business model and its potential to deliver both robust financial returns and meaningful social impact.
That's definitely a reassuring sign for anyone interested in Aadhar's future. And what about the board of directors? Are they aligned with this vision of balancing profit with purpose?
Absolutely. The board is comprised of seasoned professionals with a deep understanding of the financial sector and a commitment to responsible growth. For instance, the chairman is an independent director, which speaks to their emphasis on good governance. And they have individuals like Mr. O.P. Pat, the former chairman of the State Bank of India, bringing a wealth of experience and expertise to the table.
So we're seeing a fascinating convergence here. Strong financial performance, a deep-rooted commitment to social impact, and a capable leadership team steering the ship. It seems like Aadhar is proving that doing good and doing well in business are not mutually exclusive.
It's a compelling story, isn't it? But as with any investment, we need to be realistic and recognize that no business is without its risks and challenges.
That's a perfect segue into our next discussion point. We've explored Aadhar's impressive growth and their commendable social impact initiatives, but now let's delve into those potential challenges and opportunities that lie ahead.
Sounds good to me. I'm ready to dive in.
All right, let's shift gears a bit and talk about those potential challenges. We touched on competition earlier, but what are the nuances of that landscape? What should our listener really be paying attention to?
Well, the affordable housing finance sector in India, it's really heating up right now.
Yeah, lots of activity.
You've got those established players, they're expanding their reach, and then you got these new entrants, trying to kind of carve out their own space in the market. Aadhar, they can't just sit back and assume their success is going to continue, forever.
So how do they stay ahead of the curve? What do they need to do to maintain that competitive edge?
Well, I think innovation is going to be key. I mean, they've done a great job so far, right? Identifying a specific market, serving it well,
Yeah, they found their niche.
but they can't get complacent. You know what I mean?
Right. Got to keep moving.
Maybe develop even more specialized loan products, something tailored to like the unique needs of different customer groups within that EWS and LIG segment.
Okay, so like even more niche than they already are.
Right, exactly. Or maybe think about how they can leverage technology, get even more creative with it, especially reaching those folks in more remote areas where access to financial services is, well, it's limited.
Yeah, makes sense. So keeping an eye on how they innovate and adapt to that evolving competitive landscape, that's going to be key for investors. What else should we be thinking about?
Interest rates, for sure. Remember we were talking about that? That's a big one.
Right, that balancing act.
If their borrowing costs go up, they're likely going to have to pass some of that on to their borrowers, and that could affect affordability, especially for those EWS and LIG customers, the
Right.
ones they're really focused on.
Yeah, could price some folks out. It's a tough situation, trying to remain competitive, but also making sure those loans are accessible to the people they want to serve. A lot at stake.
There is, and it kind of brings us back to that big question, that question of sustainability.
When they keep this up,
Can they keep this impressive growth going, but also stay true to that social mission that's so important to them?
right, profits and purpose.
Exactly. And how will things like, I don't know, changes in the economy, government policies, global events, how will that impact their performance down the line?
Lots to consider. You've given our listeners a lot to think about. Any final thoughts before we wrap things up?
Oh, just one. Remember those social impact initiatives we were talking about?
Like Aadhar Kaushal, Aadhar Angan. Yeah, those are really interesting.
Think about this. How might those initiatives not only benefit the communities, right, the people Aadhar serves, but how might they also contribute to the company's own long-term success?
Interesting. So you're saying those programs could actually impact their bottom line. How so?
Well, think about it. Could these skill development programs, could they foster a more loyal customer base?
Interesting.
Empower people with better jobs, more financial stability, and maybe that reduces Aadhar's own credit risk.
Makes sense, yeah.
And what about their commitment to social impact? Could that attract, top talent, people who are passionate about making a difference, the kind of people you want on your team?
Yeah, good point.
So those are the kinds of questions I think investors need to be asking. Because that's what separates, a good investment from a truly great one.
That's fantastic. It's about looking beyond the numbers, isn't it? Understanding that connection between social impact and financial performance. Doing good can be good for business. So to our listeners out there, keep exploring. Dig into Aadhar's investor presentations, learn about India's affordable housing market, and most importantly, keep asking those insightful questions. That's what makes you a well-informed investor and a dedicated listener of The Deep Dive. Until next time, keep learning, and we'll catch you on the next Deep Dive.